Back to the live stream. Morning, welcome back. Welcome back. Oh, now you ready to be. All right, so the market has opened. Looking for where did it open at? See, and I don't, oh, there we go. I was wondering where were the candles? Where were the candles? Been open for a few minutes. Good morning, Adrian. Good morning, Tamar. Howdy, howdy. Open down at 47.45 with a little bit of a dip. See this gap that's open here between these two? You have to put some lines on the gap so that way you know that that's what this is. This is where it closed. Let me turn this to a dash line and turn it green because green for the gaps. And then we open down here at 47.45 this morning. So this is the opening sellers gap. That's what this is, the opening sellers gap. I'll make it a little bit bigger. All between here is the gap. All right. So now remember that markets generally like to fill in gaps. So that may not fill it in immediately, but it definitely just know in all the market wants to fill in the gap here. That gap will probably, I won't say be filled today because you just never can tell. The chances are kind of high, but you never, the market does what it wants to do. This is 2024. We are off to the first day of the market, the first day in the stock market. First day of 2024 in the stock market, and we've opened with a gap down. Well, I was talking about the VIX earlier. The VIX is up 1.46, which kind of gives you an indication of the market being down just a little bit. That's what's going on there. Let's look at other markets, or let's actually see what Yahoo Finance has to say. U.S. futures sink as stock rally loses steam. NASDAQ futures dropped almost 1% as investors weighed whether expectations of U.S. interest rate cuts are overdone. There are people who are on YouTube who can see me. I'm not sure why you're saying you can't see me. We can see black background, streaming green message at the base. Log out and back in. Log out and back in because I'm not even streaming the screen at the bottom. Okay, I do want to turn that banner back on though, so let me go back down and do that. Job reports is going to test stock rally as 2024 kicks off. Apple downgraded as Barclays warns on the iPhone demand, right? And Tesla beats on the quarter four delivery, surpasses 2023 target. That's a plus for Tesla, no doubt. That's what Yahoo Finance has to say for this morning. Then we switch over. We use CNBC to look at, just general news, but we also use it to look at the other markets. Tesla reported 485,000 deliveries for the fourth quarter, bringing the 2023 total to 1.8 million. Wow, it has produced more than 3 million cars in 2023. Dow futures fall 200 points to start the new year as rates rise. Apple shares decline. Apple shares slip more than 2% after Barclays downgrades it. Barclays downgraded Apple. We look at here at the European market. You've got, DAX, FTSE, CAC, FTSE Milano, and Stock 600. European stocks slide after notching 28-month high. The Merck's is up 5.6, and energy stocks gain. Okay, so now we look at Europe because other markets are tied in with ours. The markets, all of our markets are kind of interwoven. That's a good way to put it, huh? The other markets are kind of interwoven. Good morning, Ms. Deborah. Other markets are interwoven. So what's happening over in Europe matters for us. What happens here? Let's go look at what's happening over in Asia, because we trade some of their stuff and they definitely trade ours, especially Apple. We got Apple, the SPX 500 is only open during the times that our market is open, but it doesn't mean people don't trade SPX 500 and SPY and Tesla and Microsoft and Google and which is why we got things like NEO that are, or Alibaba, and some of these are, Asian or Chinese stocks that are in our market, and we're also in theirs. All right. So we look at these other markets to see what happened in their markets while, when we were sleeping, they were trading, and when we're trading or when we're trading and they're sleeping, we want to know what these things are. Anyway, Asia, ASX 200 green, Nikkei is down 0.22%. Kospi up 14.53%, 14.53 or 0.55%. Hang Seng, which is the Hong Kong one, is down 1.52, and the Shanghai stock market is down 0.43. Australia market nears all-time high. ASX must be Australia. China stocks fall amid factory activity slump. They do a lot of our factory stuff over there, so that's all. These things are interwoven. Like I said, all these things, kind of tie in together. Let's look at the calendar for today and for this week. Why is this important? The calendar is important because when these meetings happen, these things affect like the volatility of certain stocks, the market overall. These things are important. So yesterday was a bank holiday. Nothing happened there, right? Today, Tuesday, 9:45, we got final manufacturing PMI, which is going to be in about 3.5 minutes. And 10 o'clock is construction spending month over month. These are yellow folders. Yellow folder basically means, it should mean that there's low volatility expected. Doesn't mean that it doesn't move things, but the volatility expectation is low, right? The impact of this meeting. Tomorrow, though, we got FOMC starting to step in, which we see some red folders happening tomorrow. Right? ISM manufacturing PMI, jolts job openings. FOMC meeting minutes is also going to be tomorrow at 2 o'clock. All righty. Red folder means high volatility expected. High volatility anticipated tomorrow. So as you're setting trades, the reason we talk about the things for the week is because as sellers, we do credit spreads. Remember, we did credit spread challenge for the month of December. And as we do our credit spreads, we set them for the week. Well, you want to keep in mind that the things you're setting for the week, you want to see what's happening during the week that could possibly affect your trade, right? And as Tanya is mentioning in our comments, my community does 0 DTE stuff. We do trading SPX daily as a 0 DTE, trading XSP as a 0 DTE. So you want to look at these things first off, rip in the morning, right? So that way, SPX playbook, that way you can see what things you may not want to trade. Tanya says she doesn't trade on FOMC days. Not 0 DTEs. And some people, pick that. Other people wait until after the minutes have been announced and you see if there's going to be a direction, and then you go along with that. You ride along with the direction that's picked. Some people do like Tanya and say, I don't have to trade today, and I'm fine to watch, because watching is a strategy. She said, I've been burned so many times doing that. That's what she was doing. Yep. So I put spxplaybook.net. If you're looking for a strategy that you can use for zero DTE strategy for SPX and XSP, then you want to do the SPX playbook. It comes in an ebook form, and I'm putting I'm writing in .net. It actually is, you put the dot and the net, but Facebook doesn't always like the links. So I wrote it out. $27, you can get that and have a strategy to use for zero DTE. You can make 10% each day. You can make 10% returns each day using zero DTE, at least 10% each day using that strategy. Just something might get you up and running for the new year. Okay, so Thursday, which will be tomorrow, we've got unemployment stuff will pop in tomorrow, right? That's going to be the biggest red. Some other yellow things are on here for, Thursday, not tomorrow, for Thursday. And then Friday, you got non-farm employment, unemployment rate, ISM services, PMI. These are all red folders as well. So we've got red folders every day except today. Red folders every day except for today. All right, keep that in mind as we go forward. SPX closed on Friday. It's showing right now. I wanted to see where it closed on Friday, but I think we talked about that already. Let's go and look at what do we have for earnings this week. Earnings this week. We have UniFirst is tomorrow, right? Calm, I believe this is. Solutions, Simulations Plus, RGP, that's all tomorrow happening. Thursday, we've got Walgreens Boots is going, Lamb and Weston, or Lamb and Wheaton, LW Lamb Wheaton, Conagra, RPM Lindsay, Simply Good, Radius Recycling, that's all Thursday. Franklin Covey, Thursday. And then on Friday, we've got Greenbrier, Angiodynamics, and STZ. I can't see what the Canadian something maybe. STZ is Friday. That's earning. Thank you, Earnings Whispers, for always putting out this nice graphic for us every single week so we can use it with the highlight. Of course, they don't cover all the earnings for the week, but they cover like the most anticipated earnings for the week. All right. We talked a little bit at our call the other day about going left for 2024. Go left for 2024. We're going to lean into at least to 1 to 2 strategies. Try to minimize. Bring in. I was talking to my son yesterday about streamlining and getting very sleek, right? Lean into 1 or 2 strategies in the stock market. Educate yourself. Focus on some fundamentals. We're going to talk a little bit about our upcoming 4-week boot camp of Chart Your Way to 100K. That's fundamentals. We're going to work on fundamentals. And then you want to trade with a plan. Trade with a plan. All right. So if we are talking about, I don't know how to make this thing at the bottom go away. Talking about some numbers for today. SPX, those of us who are the SPX traders, XSP traders for the day. Zero DTE. This is our zero DTE help, if you want to call it that. Okay, this is our help. So Adam Mancini, love him. Thank you, Adam. Never met him, but he's on Twitter. Adam Mancini also puts out a newsletter, a paid newsletter, but these are the free tweets. He trades ES, so he trades ES futures. And ES futures mirrors SPX, so we take the numbers that he has and we check out the gap between those two and turn them into a graphic that we can use for SPX and XSP. This is kind of a guide for our SPX zero DTE traders. I would say if you're going to trade zero DTE, you need a strategy. Please don't decide you're going to trade zero DTE willy-nilly. Don't do that. Don't do it willy-nilly because, yeah, you need a strategy. because you can get your money taken from you. We're sellers. So we trade credit spreads. We trade cash secure puts. We trade covered calls. That's how we cover. I mean, 0 DTE, we do credit spreads. Some people do buying calls and puts, and that's of course fine. That's not what I coach. I coach seller strategies. With seller strategies, we pull in the money. We get paid to trade. We get paid to trade. When you're a buyer, you pay to play. When you're a seller, you get paid to trade. Anyway, 2024 starts off with a perfect bearish back test in SPX. On Friday, we lost 47.88 support and flushed. Last night, we rallied. This is an ES, right? Back tested 47.88 to the tick and then sold. The plan today, 47.38, 47.31 to 27 are supports. 47.38, 31, 27, that's all the support zone. Remember, supports is kind of a zone. It's a bounce spot here to 47.55. We can hit that 47.33, bounce to 47.55. Must reclaim 47. We must reclaim the 47.55 in order to see 47.88. We're trying to go back to 47.88. We got to reclaim 47.55. If 47.27 fails, then there's going to be a sale. Down 47.04 is the next level. Adam is a level to level buyer. He buys options. He trades level to level, which is why you'll see him give the levels along here. We're sellers. So I look for the day, where will price not go? That's what we're looking for as sellers. Where will price not go today? And that's where we want to put our strikes. When you're selling credit spreads, you want to know where's the safe zones? Where will price not go? And then that's where we want to be. All right, let's take a look real quick at what our numbers are doing. This is our opening. This is a 2-minute chart, which basically means every candle is 2 minutes. The market opened and it has continued to fall a bit. We opened at 47.45. And we're currently at 47.31. Currently at 47.31, and it's 50 minutes in. I'm switching this time to a 15-minute candle because this is where my community starts to look for what's called a breakout. We take the first 15-minute candle, see the top and the bottom of the 15-minute candle, and how does it break out of that going in the direction. And then we use, we enter into credit spreads and use that to get to set up a PDT hack based on the trend. Okay, so we trade with the trend, and then you use a PDT hack. I'm not sure if anybody's ever heard of the PDT hack. If you're a person who has less than 25,000 in your account, then you cannot trade more than 3 day trades in a 5-day window of time, right? You can't do more than 3 day trades in a 5-day window of time, not in a margin account. If you're in a cash account, you can trade all you like. But when you're in a cash account, you're not doing credit spreads because you can't do credit spreads in a margin account, okay? So as a seller, we needed to have something that would allow us to be able to do 0 DTE without the penalties of the day trade, the day trader designation. You don't want to be called a pattern day trader and get that designation and get your account locked up because you don't have over 25K. And many people don't have over 25K. So we need to figure out, how do we trade to get to 25K? I don't want you stopping me because I ain't at 25K just yet. Okay, so the PDT hack, basically, it's a whole strategy. You can find it. I was typing and talking. Can be found at my website. It's a little booklet. Nope, that ain't it. Getting all my things mixed up as I try to type. And anyway, it's a little booklet that you can find. It tells you exactly how to utilize the PDT hack or use opposite credit spreads in order to set a trade and lock in your profits. And if the trade just really doesn't go your way, you could also lock in a smaller loss. But it's a way for you to be able to trade 0 DTE without using your day trades. Okay, you can use it. Use the PDT hack to day trade without using your day trades. You can be a day trader without using your day trades. That's what we do over there. All right. Cool. We see that the candle now is trying to break out. It hasn't closed. This 15-minute candle hasn't closed outside of this first window, but that's what the breakout basically is. When the next candle after the 15-minute closes outside of it, then you can say, okay, maybe a trend. This gives you a good indication that a trend is being established. And then you use this trend to begin to set your trade as a seller for the day. I keep highlighting that because a lot of people who follow me, I won't say a lot, some people who follow me are buyers and they're looking to see, what are you talking about? Of course, those of us who are sellers, yeah, my seller folks are here. That's how we do it. And y'all know how we operate. Okay. This coming month, the month of January, we're going to have a Chart Your Way to 100K 4-week boot camp. We're going to learn how reading stock charts can double your profits. All the things here, charting basics. We're going to learn indicators. We're going to learn how to use candlestick patterns. How do we trade with the trend? Like I was just talking about trend trading with that breakout. How do you use that for income and for profits? Support and resistance, strategy specific charting. Good thing about this, even though I am a seller's coach, charting your way to 100K is for anybody, because technical analysis using the chart doesn't matter whether you're a seller or a buyer. You need to know where the things are. How do you read these candles? How do you read the chart? How do you do these? And that's going to start on Saturday, January the 6th at 11 o'clock. You can go to chartyourway to100k.com and register to join us for 4 weeks. We'll do about an hour and a half, maybe 2 hours during each session for every Saturday. They will be recorded, and we'll learn all these different things. We got a 4-week schedule, and I'm going to lead that and teach that. And you can hang out with us. Chart Your Way to 100k.com is for the month of January. We're trying to level up. Are you trying to level up? Because we are. We're trying to level up in 2024. We have circled the trees and circled the bins. Many of us have had where we've been profitable, but not as profitable as we want to be. Some of us, we've got some greens, then we get some red, then we get some green and some red. And by the time we're all done, we break even, if not lose some, and time out for that. It's time out for us, continuing to spend time, energy, and resources and not come out of this profitable. But we've got enough time under our belt now where we're going to put the foundation down and we're going to lean on that foundation to build up. We're going to stand on that foundation to build. And if you don't know the things I'm mentioning, how do you use all these things to increase your profits and to increase your income, then you need to be in Chart Your Way to 100K with all of us. We need to all be there together. We are leveling up in 2024. It's time to make a change. It's time for us to level up. And speaking of time, it is of the essence. Time is of the essence. We don't have anywhere near as much time as we had before. Things are moving at a much more rapid pace than they did previously. So we need to make sure that we're making good use of all the time that we have. Okay, we make good use of this. All righty. Let's see. I think I had one more thing. Oh, we're going there. Here we go. We're going to look at some trade ideas for this morning. I put this graphic out every weekend. Usually it has cash secure puts and covered calls, but for the last month, it's only had credit spreads because we were doing the credit spread challenge. Right, but let's look at some of these trades and see what kind of ideas we might have for some trade ideas. Okay, I do have a class, Baron. I don't know if you're listening to me on YouTube, but yes, I do. Here we go. Anybody? Let's see what's on here. We looked at Exxon the other day. Let's go look at it and see if that's still a good It's still a good trade for us to do. And I think we looked at XLK the other day too. And how about we check out what's happening in the crypto space? Oh my goodness, I saw some stuff yesterday that showed that the crypto stuff had moved and moving and moving. Let's see, does anybody have one on here? Agreed, let's go. We're leveling up. It's time. It is time. Exxon is moving up. I believe it. It's on the, we had it on our call credit spread list, but let's go see what we got going over here. Exxon. This is a call that we do every morning within my community. We do this every morning within my community. I decided everybody who follows me, my email is on my email list or whatever, saw that we decided I'm going to do this for this week. I'll do it on YouTube live. If you want to be a part of this on a daily basis, you can join the YouTube membership at the 3rd level. I think it's called the booster level for the Educator to Trader channel. And you can see me every morning at this same time, at this same place. We'll be doing this same thing. Right. And I think it's $34.99 for that. Now, my membership includes the morning call, includes a Wednesday evening training every week, and include once a month, we do coaching calls once a month on Saturdays. So that's the full membership that we have for $97. But if all you're interested in is the morning call, then sign up with YouTube and just hang out with us in the mornings. If you want the full membership, which I would if I were you, go over to Educator2Trader.com and look at the E2T membership and get in on all the stuff. Andrew says, or Kat says, that crude oil is up today. XLE had a little pop this morning. Good morning, Facebook user. I can't see who you are, so give StreamYard permission to tell me who you are. Exxon is moving up. Tanya says she jumped in on the 103 sell leg. Okay, let's take a check. And Kat said Mara and Riot, we're gonna look at those. All righty. So we're looking at XOM. You jumped in the 103 sell leg on the call credit spread, Tanya. Let's go look at the daily chart first. So let's see what's going on here. Before this is over, I'm going to swing back to SPX so we can look at there may be an opportunity to do a 0 DTE. Remember, I'm here to help. I am not a financial advisor. None of this stuff is investment advice. If you lose money, I will be sorry, I promise you, but I'm not taking responsibility for anything that you choose to do. You are the CEO of your own portfolio. All right. Looking at XOM. We looked at it the other day, but let's look again to see what would be a good resistance place. Actually, it's at the top of this gap here. There's another small gap between December 26th and December 27th. That is also here from 102. And then this full resistance here is 102.74. I don't usually make those red. But if Tanya was saying she did, there's another one, another resistance point here, which is 103.50. Tanya said she did the 103 sell leg up here as a call credit spread. Makes sense. We got Tanya said she thinks it's going to hit 102.95 and turn around. This you would look for a call credit spread above. Remember, when you're a seller, you do things opposite. So if you think calls are going up, call credit spreads means you believe it's going to go down or at least stay down. Call credit spread. What did we have for the graphic? We had 102, 103. Yeah, 102 might have been a little more nervous because we're at 101.77. But that's why we always talk about over the weekend, when we look at these, we say, okay, these are the numbers that it shows as a result of like Friday, and the chart would then show. So what we then say is when the market opens on Monday, when you're looking at it, you're looking to see what did the price do on Monday, and you make a determination of what's a good strike for you then. All right. Liquidity traps. And remember, you'll have to talk a little bit more about that because I don't know what liquidity traps are. Okay. So call credit spread up here above. Now, if you decide you wanted to do a put credit spread, maybe you want it to be down here below where price is down here, right? There's a gap now between these two. I'm going to fill it in here. There's a gap here. Make it green and make it dashed. Green and dashed. Here, this is a buyer's gap that is between these two. I'll put a little note here so we'll know what this is. Basically means it gapped up and left some buyers in there who might have bought at these levels between $137 and $100.97. Somebody might have been in here saying, I'll buy it at $100.50, but y'all skip me. I don't want to buy it at $100.97. There's a buyer's gap right here. So what you could do then is look to see, maybe we'll do a put credit spread underneath this support. No, that's not what I'm telling you to do. No, there we go. I want this. Come on, let me type. Let me type. Here we go. We're going to put a put credit spread. Put credit spread, believing it's a bullish move, believing that price will go up or at least stay up above. It will stay up above your strike. So you do a put credit spread down in here. I'm thinking maybe 98, 99 or 97, 98, something like that. Well, there's another gap that's just below here. Might want to make sure that we're maybe below that. So maybe we do a put credit spread in the 97, 98 zone, something like that. I don't have Thinkorswim open so I can look at the probability out of the money, but y'all know we usually look at probability out of the money to see what would be a good strike. Probability out of the money, 75% or greater may work out for us as far as selecting your sell strike. If you're listening to what I'm talking about and you're like, I don't have a clue what you're speaking of, you can always go to check my YouTube channel further for vertical credit spreads. Or you can go to, my website and get a full training, Educator2Trader.mbsite.com.app, sorry. And you can get a full training on doing credit spreads. I believe credit spreads, no cap, is a way, like the best way to grow a small account. If you're starting in 2024 and you're trying to grow a small account, when I say small, I'm talking about 300 or 400, 500, 1,000, 2,000, 5,000, those kind of fall in the, but you can start this with as low as $100. You can start with as low as $100 when you're trading credit spreads. Yes, you can start with $50 if you're great trading credit spreads. Just keep in mind that when you're starting, you're going to get like 10% returns on your trades. So if you start with $50, you can expect maybe 5 to 10 back for each trade. So you can't be frustrated with, the amount of growth. At the level of growth, it will still grow, but you can't be frustrated with it if you start with just a little bit. Start with 100, you can pull in maybe 10 to 15 per trade. You start with 200, you can pull in about 20 to 25, and this grows. It grows over time. But listen, I'm start where you are. $100, and you got enough. If you've got $50, let's start. Just be realistic with your profit expectations after the fact. That's all I'm saying there with that. Okay. So we looked at maybe an opportunity for a call credit spread and or a put credit spread. Hey, listen, and you do them both. Call credit spread, put credit spread together is called an iron condor, and you pull in that both of those pieces of money using $100, because to trade what I just mentioned will only use a collateral of $100, right? Let's look at Mara. Mara is we had a let me take some of this stuff off. Mara had a dip last week, and it's been kind of dipping ever since, right? If the gap down here got filled, there was a gap between December 26th and the 20th gap got filled Friday, right? There was another gap between the 23rd and the 20th. Between the 21st and 22nd, that gap also got filled with Friday. So we can take these off. Lets us know that that gap is filled. Call credit spread. maybe above, not 29 now. Maybe we got a call credit spread that's above, has to be above 31, because that's where the resistance is, 31 and some change. We need a call credit spread above that. CCS stands for call credit spread. Hey, Lisa. And if you're looking for a put credit spread, I don't know. If I was going to do a put credit spread, I'd be looking down here underneath this gap, maybe, because I see there's probably a pause in here. I'm going to turn this to a line chart so I can see what happens in here. Yeah, there's right in this area of 2212. You turn it to a line chart. Anywhere you got peaks and valleys or resting places, like here, this is a resting place. This is a resting place here at 26. Those are places of support and resistance. Wherever you see peaks, valleys, and resting places. Some people call them chairs. Some people call them a chair. All right. So let's turn it back to candles. So I would look for a put credit spread maybe underneath this resting place that was in 22. There we go. Put credit spread under PCS under 22. Okay, I'd go with something like that. If you're going to look at Mara. Now, Mara, it shows you here, this is a support area. See how it dipped here and then it opened up, higher and it's falling down now. But this is a support area. Wherever you see the peaks and the valleys, the dip, baby, wherever you see the dips, that's support and resistance zone. So the support is actually at 23.49 going back up. These are moving averages. We'll talk about moving averages in our chart your way to 100K. We're going to talk about how do we utilize moving averages and trend lines to help us determine good place to be. These are trend line, actually. These are moving averages down here. How do we use those to help us with our support, resistance, help us determining strikes, entry places? Moving averages definitely can help us do that. Okay, so that's the put credit spread under 22. I probably would even look maybe under 23, but we got to remember it's the week. You got to go for the week. So you don't want to be greedy, but you do want to get the best premiums possible, right? Because greed is one of those psychologicals that'll cause you to lose your money. We're overcoming greed in 2024 too. We're going to trade good, solid setups, take the money that we're going to get off those, let that rinse and repeat. The one thing I love about selling is it's, I'll say dependable from the standpoint of you do know what you're going to get. When you're buying options, you can have a hope or an anticipation of what you might get out of it. But when you're selling, if I collect $20 off this trade, I'm getting $20 off this trade, right? That's the way that goes. What else we say we're going to look at? XLK. XLK. In a minute, I'm going to turn on my Thinkorswim, and then we can we'll look at a trade. Like we'll look at the entries and all that. It's about 10-15 time to start looking at what may be a potential trade entry. What may be a potential trade entry? Okay, so we're looking here. I went back to SPX first, so we can see what's happening in SPX. This red here, remember this was the 15-minute that I told you about, 15-minute candle. It didn't break out of it yet. It hit this bottom support at the bottom of this 15-minute candle, and it's now trying to climb back up. Could it go up here and start trying to fill this gap? Yes, it could. Yes, it absolutely could. Right? So that was SPX. We're looking there. I want to move this to another screen. So that way, when I get ready to enter my data, it won't be live and in living color. Okay, we were going to XLK. XLK. Let's check out the daily first. I'm getting hot. I may have to turn on the fan. Technology sector, right? That's what's going on. What's going on right now? It has filled this gap. There was a gap back here between December the 12th and December the 13th. It has filled this gap. So we can take these lines off and now look for us some support and resistance. But now what it created, I probably should have just moved them. It created this line here, which is a gap. It created for the year, just like everything else, like SPX gap, XLK. Okay, nope. There you are. Let's go over here. If we're looking for some support and resistance numbers, let's look. We probably could see resistances up here. Now, the top of a gap also is a place of resistance. Okay, the top of a seller's gap, right here. And we've got resistance right there. Let me duplicate. There we go. Thank you. Up here is also a resistance zone. That's where price went and turned around. But the top of this gap will also, there's sellers that are hiding here. Like, I wanted to sell my change and y'all skip me. So the people who had stuff they wanted to sell in this area, those orders are just still sitting and waiting. So this is called a seller's gap. Right? So again, gaps like to be filled. If we're looking for some support, I would say there's some support down here in the 185.69 area. And that's based on this right here where price went and reversed. There's also another one down in this zone. Okay, this was a 181.94. So if you were looking for XLK trades, you really could look to maybe do a what's this above? What was a put credit spread 189.190. 189.190 would have been down here. It's not a good thing for that. So remember, we always check to see, we put on the graphic, but then we go when the market opens to see what would be a good spot below 185. Okay. All right there. Looked at Riot Mara. Yeah, I know, Tanya. I can see it when it pauses and circles. It's weird. I need to call Xfinity to have them come out here and optimize my internet. I paid for all the power they could give you, but of course they give you enough. They give you a certain amount of download power, but they don't necessarily increase your upload power to this at the same degree. And I need upload power. We need uploading power. I'm going to turn this off because that will take it. Once I turned on Thinkorswim, it takes up a lot of data and stuff coming in. So you have too many things running at the same time. It starts to cause issues. Okay, let's look at SPX. We're on the 15-minute chart now. I turned off Trading View because that any charting app is pulling in lots of data to keep it live for you. I'm not in a basement. I'm in another room of my house, but I'm not super far away from the thing, but I may need to get an echo. I did buy a like an extender, but I can't seem to get that to do the extending. So I need to look a little closer and of course, look a little closer. Usually ends up with spend a little more money, spend a little more money, and get up and running. But we will make it work. Believe me, because we need to be able to comfortably live stream. Need to comfortably live stream. Okay, you getting ready to go? Okay, enjoy. Love you. We see you later. Be safe out there. Okay. Looking at SPX, this was our. I didn't want it to get any smaller. This is we wanted to show our 15-minute candle again, that we had our ups and downs here. There we go. Make it a little bit bigger. We still haven't broken out of this that 15-minute candle. Tanya, I'm so glad you're here. I really like to have you join us. I'd like to have you join us. Okay, so what we're looking at? We were looking at Exxon. Let's go back to Exxon to see if this is what the trade would look like. What did we come up with for numbers? I gotta go look again now to see what did we say would be good numbers. Well, I can go straight here. Let's go. We looked already for XOM. Now let's look at it from a strikes standpoint, right? Our steps. My credit spread challenge, people unite. It's time for the credit spread people to unite. Here we go. So if we're looking at Exxon, we look to see that we really could do an iron condor. I don't necessarily enter iron condors on the same day, because I think you should get them like when price is going in one direction, you get the top side, and when it's going the other way, you get the bottom side. At this point, the price of Exxon is kind of right in the middle of the two zones. So I want us to look at both sides so that way you can see what the process actually entails, right? Many of you already know the process, but if you're just joining us today and just kind of seeing what is we talking about, then let's look at it, okay? Here we go. If we start looking, we're going up today. So let's start looking on the call credit spread side. And I'm saying that because as price is going up, if you get a trade up here, you're going to get a little bit better premiums when price is going in that direction. All right. So looking up, we said above 103, looking for a probability out of the money of at least 70, 75. This one at 103 is at 69%. And it's probably okay, but I don't want to encourage anybody to be more aggressive than they're comfortable being. If you're a little bit more aggressive trader, 103, 104 may be for you. But if you're a little bit more conservative, you might want to go up to the 104 strike price. When you go a little further away, the safer you get, the less money you get. That's just the trade-off. And that's okay to go a little further and to get a little more safety. You better be safe with your profits than not quite so safe without them. So if you look at 103, 104, that trade is paying $22. But if you look at 104, 105, that one's paying $14, which I think that's okay. I think that's okay. $14 on 100 spread on a one spread is 14% return. Okay, 104, 105, $14 is a 14% return on your collateral. You collect that money right away when you enter the trade, right? I'm going to go through the steps one more time for anybody who's looking for the first time. I'm on the single chart. I was here first. Look on the single chart, and I was looking at the probability out of the money. Now, this is Thinkorswim. If you're using some other platforms, you may or may not have probability out of the money, but you can use Delta. Everybody's got Delta. You're looking for a delta of 30 or less, 25 if you're more conservative. 0.25, 0.3, you're looking for a delta. If you don't have probability out of the money, you're looking for a delta of 0.25 or less. All right. 103 was the strike that we picked that was 69 here. And then 104 has a delta of 20, which is about an 80% return 80% probability out of the money. So we did pick 104 and 105. We picked 104. So I switched over to vertical. 104, 105 is the call credit spread. It now becomes a spread. We like the 104 strike. So when we pick it, we want 104 on this same side. 104, 105. Select this. Lets us know we're doing a spread. We're selling it, which is why it's red. We're going to collect a credit of $13, $14. You can change this number if you want. I usually leave it, but 14, maybe I go up $1, see if I can get enough to cover my fees. And when you're ready, you confirm and send. It tells you here how much your max profit, $14. Your max loss is the other $86, which is $100 minus $14. Tells you your buying power effect. And then when you're ready, you send the trade. Exxon moves about $1.75 a day. Oh, I didn't talk about over here, this plus minus number on the platform. This is in Thinkorswim. I don't know if everybody has this, but it basically says that the broker believes between current time and this expiration of the at 4 o'clock on January the 5th, that the price will most likely move no more than plus or minus 2.1. So we take the probability out of the money, plus minus 2. Are we further away from that? We selected what, 104. So if we add 2 to this, we're at 103.8. That is still 104. So we want to get outside of this number, outside of the support and resistance, outside of, get your probability out of the money, place your trade. Let's go back to the put credit spread side. Put credit spread side, probability out of the money, 75% here, or delta point 23 is at the 100 strike. 100 or 99, whichever one you're comfortable with. All right. 100 strike. So vertical, we're looking at 99, 100. Right. I would go with this. Oh, our other trade picked up. We had 104, 105. 104, let me tell you, it's XOM. 104, 105 call credit spread, and we collected $14. Some may say that they don't believe that $14 is enough doing, but again, that's a 14% return on your $100 in 1 week. And the stress that's required is not present. All you got to do is at the end of the week, you just need the price to be below 104. You don't have to worry about exiting at the right time, or if I don't watch it and I miss my exit, none of that. As long as price is below 104, you keep all your money. What I love about selling is that it doesn't require a whole lot of maintenance for the week. If you're doing daily 0 DTE, that requires a little more watching, right? But for the week, not so much. Okay. Ross is asking, can we use those like XOM on the trade I did with PeakBot? Absolutely. As long as it's on the PeakBot list, like yesterday we did on the call, was it day before yesterday? I did on Carvana. We talked about Carvana, and Carvana is on the PeakBot list. PeakBot is automated trading for those who didn't know that. And we use automated trading as a seller. We use that over there. You can use it for the wheel. As long as it's on the wheel list for the week, you can use it. Yes. Okay. We were looking at 99, 100 over here. I'm selecting that. Again, I wouldn't necessarily always enter an iron condor because I would probably want to give it one more day to see what did Exxon actually do, what kind of movement, but I want to show you how we could enter that one as well. Okay, $16. We did 99, 100, and we're sending that. I don't think I typed that in. Exxon, what did we do? 104. Well, I wrote that up there. I did write that up there. And we did 99, 100, and we collected 99, 100 PCS, and we're going to collect $16. Okay. Let's go take a check back now to see what SPX is doing. Go back to the chart. XSP is the mini of SPX. XSP is the mini of SPX. So if you want to, when you're trading SPX, you're trading at a 5 spread. That's the minimum you can trade, which is $500 per trade. But if you're doing XSP is a 1 spread. So you can trade a one spread with use $100 of collateral with XSP. Okay, looks like we collected $17. So our XOM trade total is it an XOM Iron Condor, which is basically put credit spread, PCS and CCS, and collected $31 using 69 of collateral. Okay, this is for the week. So if you did XOM and you collect $31 using 69 of collateral, and you want more, you want multiples of 31, you do multiple contracts. This is just one contract. What I just put in was one contract. So if you want to make $60, you do two contracts. $90, you do three contracts. Of course, you're making more collateral, but you're also, you're making more premium, but you're also putting up more collateral. So two contracts, you're going to make $62, but you're also going to put up $138. You're going to double the amount of collateral, just like you're doubling the amount of premiums. Okay. Everybody clear on that? What else do we want to look at? It's about 10:30. We're going to start to wrap up here. Do we have anything else we want? Any questions we need to discuss? Anything we want to talk about before we wrap up this morning call? This morning call is going to last, like I said, probably about 30 to 45 minutes each day. We're going a little long today because I wanted to make sure that everybody was clear on what we're doing here for the week. Right? We're going to be here live each day this week. But this all is usually underneath the umbrella of the membership. You can join the membership. I thought we did, Mara. Did we not do Mara? Okay, we will go back to it, Tanya. Under the umbrella of our membership, if you want to be able to hang out with us on the morning calls, we're going to do them on YouTube, I believe, from now on. You can join up with the YouTube membership and be able to hang out with us. If you're a member of my membership, my $97 a month membership, this morning call is a part of that, as well as the Wednesday trainings, and that's once a month on Saturday trainings, right? That's also happening in the big membership. You have it all in there. Or if you only want the morning calls, you have to join the YouTube membership and see us there. Okay, so if we're looking at VU looks like it's got some resistance up here at 438. There's a gap here between 687 and 434. But I do see VU may be a good place for some, investing, right? It's been on an upwards trend for a while. VU is the Vanguard S&P 500 ETF. So okay, it's the Vanguard S&P 500 ETF. So it's a good mixture, but it's an ETF. So it's probably doesn't have as much volatility as SPX in itself does. Okay. Definitely, Tanya, if it says if you're ready to get out and it's saying it's worth $1, you may put $2. That way you can get out. Okay. There's also a support here at 429. So Iron Condor between 438, 439 maybe, and 429. I'm thinking this is probably, looks like it trades once a month. Looks like it has monthly expirations, and it's a 5 spread, Rasta. VU is monthly expirations and a 5 spread. It may be better for investing, like buying shares, because it's probably going to continue to go up. Okay, 0.07. If you want to just wait, put what you want there and then let it, do its moving around, Tanya, or go ahead and close it down. Let's look at Mara. We looked at Mara before, but we didn't look at the numbers. Okay, so 31 up here. And if we were looking for some support, it's probably around 22. Let's go look at it on the option chain. See what kind of, Mara's got some up and down happening right now, but we do know that this crypto base is real green right now. So it may or may not be great to get on the top side, because if something happens overnight, these things pop at nighttime. So something happens overnight, you might find yourself in the morning on the wrong side of this trade. So I'm not telling you anything to do. I'm just saying that we do know that the crypto stuff is real green right now. It's green from the set. Now, these 3 days don't look green, but all the crypto stuff is expected to be moving up because of the potential acceptance of this ETF that's supposed to happen within the next few days. So any day this can do its thing. You just want to be prepared. But you see that it's been going up since back here in October. Mara's been on an uptrend since October. Okay, so it may just look really with a put credit spread instead of doing both sides. But let's see what we got as far as I see a gap here that's down here in the 1920s. Okay, let's go look on the option chain on the put credit spread side. If we're looking for probability out of the money of at least 70-75%, that's 20.5 or 21 to delta of 0.2 and 0.17. So maybe 20.5, 21. Okay, let's go switch over to vertical. 20.5, 21. This is a 0.5 spread. 0.5 spread means that there's $50. There's $50 of collateral that's required. 0.5 spread is $50 of collateral. Requires $50 of collateral. Right? 0.5, that means the difference between these two numbers here, 20 and 20.5, is 0.5. That's what that means. Okay? So we were looking at 20.5, 21 or 20.5. Let's select. Now our plus minus number here is plus minus 3.9. So this is like 4. If we were to take away 4 from here, we'd be at 20. Take 4 away from here, we'd be at 20. So let's see what's 19.5, 20. This is going to pay $9 for a 50-cent spread. Okay, that's like an 18% return. $9 divided by 50, be $18 divided by 100, 18% return. Don't forget, you got to pay fees. So I don't want to ever leave, depending on what you're using. If you're using Robinhood, the fees are much less if you use Robinhood. But over here on Thinkorswim, the fees are 65 cents, 50 to 65 cents, depending on what you have going here. 20.5, 20 and 9.5. I personally would want to go just a little bit higher. I would go back into maybe this 77 at 20.5. I'd go up one more step. 20.5 is going to pay $10 in premiums for a 0.5. That's a 20% return on your money. What did I say? 20.5. Mara. 20-20.5 PCS. Paid $10. Okay. For this Friday's expiration. PCS. It could be that the call credit spread side would be fine, but with the volatility of what's happening in the crypto space right now, the chances of it going up are much higher than it continuing to go down, right? And you're putting on a trade for several days, so you keep in mind the things that are happening around it. We look at the chart. That's a big piece of your technical analysis, but you also don't discount what's actually happening. Mara is going to be affected by what Bitcoin does. Mara's going to be affected by what happens with this ETF. So the chances of it going up are pretty high, right? But if you wanted to look on the other side 80% probability out of the money is like 28.5. This is up about 4, right? If you want to go up about 4, 28.5, 28, 28.5. That's paying like $5, $7. I don't know if it's worth the risk. I don't know if it's worth the risk. Okay. Let's wrap us up. I was talking a little earlier about the things that we do. I'm not sure if y'all can see this. This is the things that happen in the E2T world, right? We have a lot that we do, a lot of support we provide to our traders, right? On Sundays, we go live every Friday every Sunday at 5, we go live. On Mondays, we always have our morning call. This star M means that that's for the members, right? On Tuesday at 9:30, we also go live every Tuesday. Wednesday, 2 o'clock, we go live on YouTube. 7 p.m. is where we have our weekly training call. This month, we're talking about things like make sure our trading plan is updated and ready to run. We're going to talk about trading psychology. We're going to talk about selling puts this month, selling cash secure puts, selling cover calls. Those are some of the topics we have for Wednesday night this month. Thursday, we got our morning call. Friday, we have our morning call. Saturday for this month, for the month of January, we're doing a Chart Your Way to 100K boot camp. That's what we're doing there. All right. This is our plan for the month. Chart Your Way to 100K going on. Go ahead and, get yourself all logged in for that and registered for that. Make sure that you subscribe to the channel so that you don't miss me when I come on here. I don't want you to miss me. If you want to hang out with us for the morning calls, go ahead and join the YouTube membership. If you want to be a part of our entire, membership piece, all the pieces, you got to go to my website, Educator2Trader.com, and sign up the membership. You can also just go to look at all the training classes. All of my trainings and everything that we do is all at Educator2Trader.com. All right. One of the major things that comes as a part of our membership and some of our other products is you have access to an exclusive Telegram group where I'm there and my team is there to help, support you along the trading day. Trading is lonely and we don't have to go this road alone. You don't have to go it alone. It's always more fun when you got people on a good road trip together. If you go with the right people, it make it a whole lot more fun, right? So that's one of the things we offer is an exclusive Telegram group where we're there to help support you and just really trade together, win together. We do life together is basically what we do, to be honest. All right. It's a good, warm community that we've cultivated. All right. All righty, everyone. We do 2 things in this community. Boom, pound, pound, pound. We stay green and we get this money. All right. I will see you in the market. If you got any questions, send me an email. All right. Find me on social media. Send me an inbox. All right. Talk later. Goodbye, everyone. Bye-bye.